That's great. So thank you everyone for coming. I know this is the second year at this location. We've got some new faces and got some old faces, which I think is a real testament of the value of this conference, having people come back the second year in a row. So want to also thank Steve and Alyssa and the rest of the crew here for putting this together. It's not easy, and thank you to both of them. So great. So James and crew, we're going to call everyone up. So we're going to start with Colby. Colby, give us something different. Tell us give us 30-second bio. Most importantly, I want to know what you're passionate about. Don't say real estate, don't say technology, and don't say wireless. So go ahead.
That's tough. So my name is Colby Sinus. I'm an equity research analyst at the investment bank Cowen. And what I mean by equity research analyst is I put buy, sell, and hold ratings on certain stocks. And the coverage universe that I have is what we refer to as communications infrastructure. And that includes the tower companies like American Tower, Crown, SBA. I also cover the fiber space, so names like Zayo, Cogent, Unity, et cetera. And then I also cover the data center space, names like Digital Realty, Equinix, CyrusOne, et cetera. In addition to that, I cover the telecom services space, so names like AT&T, Verizon, T-Mobile, and Sprint. And really, I spend probably half my time going to industry events learning about the sectors to which I cover. And I've been doing this since 2002. And the other half of that time I spend talking to our clients, so the mutual funds and hedge funds of this world who are buying and selling those stocks and trading them on a daily basis. In terms of what I'm passionate about, I spend a lot of time working. So it's tough to find other time, but I have 2 kids right now that are 8 and 6. Going to school in Brooklyn, which is where I live. And I guess I would say that I'm passionate about my family.
Great.
Very good. My name is James Henry. I'm a co-founder and senior managing director of Bank Street Group. Bank Street's a boutique investment bank. We focus primarily on providing merger and acquisition advisory services to companies in what we call the communications infrastructure and services ecosystem. So,
we came up with that first.
Yeah, we'll see. Patent pending. And so to us, that's really the critical infrastructure that provides the bedrock of the digital economy. So fiber networks, data centers, wireless towers. And I'd say that from a transactional perspective, we've been most active with assets that are kind of at the center of the convergence of those categories. So for example, we worked with Zenfi last year in their merger with Cross River Fiber. Earlier this year, we represented a company called Colo ATL, an Atlanta-based data center, in their sale to American Tower. So I think it's a fascinating, vibrant market from our perspective, and Colby and I traffic in many of the same circles from an industry perspective. But I'm fascinated by the fact that what were once really distinct or independent silos within this overall ecosystem are now cutting across one another and blending very actively. Do I have to answer the passion question?
Yeah, of course. It could be cat videos. It could be all right, whatever you'd like.
I'm passionate about artfully airbrushed headshots and socks, as is Colby. So I'll leave it at that.
Was that planned?
No, it was, but I said gray and black. He said white and blue, and that's how it turned out. Yeah.
That's great. Okay,
No,
and also similar
planned.
shoes. I know. I think there's similar loafer shoes. So
It's a banking standard shoe.
Yeah.
go ahead. So speak up.
All right. My name's Gary Terrell. I'm an engineering manager for Freddie Mac in both enterprise networks and mobile networks, and most recently public safety. My major passion through life is I have 36 years experience. I started off in the industry before there was an internet, back in the CPM days. It's actually that 15-year-old kid who worked for a company called Godfather's Used Computer Syndicate. And through the years, learning different networks, working with different communities, different people, passion behind information is telecommunications. Being able to communicate with someone, understand, and more importantly, get your point across in a healthy, mutual way, which kind of leads into my passion these days. Working for a company like Freddie Mac, we are a large investment bank. Yeah, we are, for the most part, a brand name. And currently, we're heavily into the multifamily area and affordable homes. We buy a lot of old buildings. So recently, like in the last 3 weeks, I started asking the question, what is a good investment? And more importantly, if we're gonna tear the building down to the concrete, why would we consider putting a backbone and then figure out later on where you wanna take it?
Gary, you skirted the question. I still want to know, what are you passionate about?
All right.
And then we'll get right into it.
So my passion is, my kids. I do have 11 godchildren, all girls. So one of my passions has become shopping, because I have a lot of birthdays, and they all have me wrapped. So.
Excellent. Thank you. Thank you for sharing. Are landlords today getting the value of having a tech-equipped piece of real estate? And how has that changed from their perception 10 years ago? And then what does the future look like for them?
I could start. I think for a long time, landlords looked at it as a revenue opportunity. And as a result of that, they expected someone else to pay for it and still somehow make money on that. And as a result of that, you saw a lot of buildings ultimately not getting the proper coverage inside that they needed, and ultimately we're getting to a point now where that's transitioned to one where I would think that that's more of an amenity. And what we're seeing now as a result of that is landlords are changing how they look at that, and they're quickly starting to realize that it's not about generating revenue. It's about actually providing the proper amenities to your tenants. I'd also point out, though, that when you look at the amount of commercial buildings that are out there, I think it's less than 10% that actually have DAS networks inside of them. So there's a huge opportunity out there still to be had. I'd also point out that with new technologies like unlicensed spectrum coming, which I think we can talk about a little bit further, as well as edge computing, there are going to be some new models, and I think this is changing very, very quickly, and we're starting to see that come to market as well.
And I would certainly agree with all of that, and I guess I would add that landlords, property owners, they will see value in ameliorating tenant churn or attrition if they don't have adequate investments in the key physical infrastructure in the building. And also in attracting, good, high quality or well-heeled tenants that they want. I mean, increasingly, when you take a market like New York, when someone is looking for new office space, they're gonna show up. It's nice. It fits the floor plan. Has the wireless coverage. If they don't have 5 bars, there's going to be an expectation that the landlord or someone is going to make an investment to afford, high quality mobile coverage within their footprint. And as Colby said, an amenity service as well, things like Wi-Fi in common areas and the like. So I think if anything, landlords, property owners, take your pick, who don't make these investments are ultimately going to find themselves at a competitive disadvantage to those property owners who do.
Great, thank you.
Yeah, I have to agree with what was said. It's kind of funny recently, as a lot of the neighborhoods, suburban America, the cable companies are now starting to, you walk in your house, you have Wi-Fi on. I won't say the cable name, but all of a sudden you're on a cable network. I think along with that is, it's a great idea, but the landlords and most of the people I meet, we buy a building, we flip it, we sell it. The consideration of what happens inside is really a marketplace that needs to be birthed, And the cable companies are finding it because they're turning it on in your house, and that's just something else they know about you.
How about opportunities outside of New York, Chicago? Because I know we have a lot of people out in can I use the word flyover states? Is that somewhat insulting? Well, I'm going to insult everyone. I'm from New York, so I'm allowed to. How about the opportunities in some of the flyover states? What type of opportunities do you feel are there, and is that still that 10%?
Yeah, I mean, I think when you think about it from a commercial building perspective, it's buildings that typically have over 1 million square feet, where the economics have made sense from a carrier perspective to go and put the investment into lighting up a building with an indoor DAS type solution. Generally speaking, it's those buildings that are sub 1 million square feet where it's become more difficult to make the math work, and as a result of that, we haven't seen those being put in. So one could argue that there's more of those smaller buildings and more of these smaller markets than there would in a New York City. It all comes down to the money then. And I think that one of the things that's changing now that could enable more buildings that are smaller to afford to put these solutions in is actually a neutral host type network. And if you think about it, when you're building a network for Verizon or AT&T or T-Mobile or Sprint, each one of them would have to have their own physical infrastructure within that building to make that work, and that was costly. With unlicensed spectrum, and the most obvious and the soon-to-be first is the CBRS band, the 3.5. There's other bands that will come behind that are also going to be unlicensed, and in fact, the CBRS is probably going to get commercially deployed in the next few weeks. If you think about that, you could actually have one network being built using the 3.5 spectrum, and if all phones, in theory, will support 3.5, whether it's a T-Mobile phone, a Sprint phone, an AT&T, Verizon, you could all kind of, for lack of a better description, roam onto that one single network and make it much more cost-effective than what we've seen before. So I think this ultimately comes down to the economics, and I think that things like unlicensed spectrum are going to allow us to see greater expansion, if you will, of the number of buildings where you can have an indoor network.
Thank you.
Yeah. And Colby made the point, which I think is a good one. You had a variety of good points, by the way. It's not so much tier 1 market versus tier 2 or 3. It's about building size, right? It's, what's the nature of the structure, and is there adequate density of humans, right? Whether it's residents or tenants in the case of a commercial building, to create a choke point in the wireless network. There's also the exogenous factors, right? So is there some coating on the building for environmental efficiency that wreaks havoc with the RF signals and creates challenges getting in building coverage. So it's very much a kind of building size and building kind of dynamic issue, as opposed to, are we talking about New York City versus Buffalo? And I think there's a very long tail of buildings where it's not an obvious candidate for a carrier-funded DAS system with multiple tenants, but where you can build in, you can build fiber up and down the riser and monetize that in many different ways. So for Wi-Fi as an amenity to tenants, in the common areas for Wi-Fi as a subscription service, some carrier offload connectivity for the building itself in terms of the HVAC system, security, things like that. So I think, again, different sized buildings will require different economic models in order to cost justify the deployment of that type of infrastructure.
All right, so I'm going to make a political statement. Not about politics, though. All right. What elected our last political president, was suburban America, your flyover cities. They need help. More importantly, they need service. And if we look at going out to the furthest points and start providing good service to them, we increase their quality of life. We increase their quality of being able to go out, baby monitors, cable TV that's not satellite or over the airwaves. And then from there, you start working your way back, and your phone should be able to go into SOS. You should be able to find a phone that's even logged in and log it out and press SOS. I think just the common factors of going out into the wilderness and pulling it back in was where Nextel made its big success. They covered the mountains, and then all of a sudden they pushed in and they got the federal government. I think businesses owe it to us as Americans to fix what's broke outside of the city limits, and to your point, flyover cities, because where I live, it's pretty good coverage. Where I go and have friends, they have none. What do they do if an emergency happened? We need to fix that.
So I run a marketing firm in New York City. We work with a lot of tech companies. This space, I know, just as a marketer, is getting on the radar. Whether it's the DAS, whether it's the real, combining the smart buildings. But there's still, our clients, they're still changing their business model, or they're tweaking it, or they're pivoting. What advice would you have for, let's say, small to medium-sized businesses that have a telecom background, have some capital to deploy? What type of area or business would you encourage them to invest in?
I could take that first. I would do my homework. I'd look at the options that are available to me, and I wouldn't look at the price points first. Sometimes a lot of people look at the price points to make a decision on technology. Sometimes what the technology offers and where it might go above and beyond, maybe you shouldn't go with the lowest buyer. Educate yourself to the companies, the roadmap, and then make a decision on not just what's best for today, but start looking like, I'm going to be a bigger company tomorrow, and I want those features now.
I would say fixed wireless. Just going back to the point that you were making, part of the issue, again, goes back to the money. How can you afford to build out to all these different places? And it's difficult the more you go out from the core. Fixed wireless is coming. I think there's still a lot of debate and controversy around that. I don't necessarily think that what I just said is consensus. But I do think that over the next 5 years, you're going to see a lot more fixed wireless type solutions come to market that will serve and solve some of the issues that you're saying. So if you think about 5G, you think about the spectrum bands that are going to be sub 6 gigahertz. Those should provide 100 megabit per second type average speed, which is better than many DSL solutions if that's all that someone's getting today. And if you think about the millimeter wave spectrum, you actually have to be closer to the node, and there's various debates in terms of the quality of that, but the speeds there are going to be in the hundreds of megabits per second. And I think that in terms of solving some of these needs, and you're saying what would you invest in, I think that there's already a lot of these fixed wireless companies that are regional in nature, and I think that you're going to see that become increasingly more widespread as a solution to solve some of these problems.
And I would say, I don't know if you would agree with this or not, but I think also these subcontractors, right, working with some of the big carriers too. I know that there's a lot of master contracts or contracts out there too. So I would imagine building relationships with the larger carriers too that need good integration with a real estate background as well.
Yeah, I would certainly agree with that. I mean, one thing that we've seen, a lot of our work at Bank Street is with companies that, own and operate networks, whether it's fiber in the street or fiber in nodes, in the riser of a tall office tower or apartment building for that matter. Those assets, those businesses are expensive, in relative terms. Valuation levels for the tower sector, for example, and for the fiber sector are at really all-time highs, which has caused a lot of investors to look around and say, okay, well, what else? Who else benefits from these trends? Who's going to benefit from the 5G boom? And Ari, to your point, these, I guess what are increasingly called, telecom infrastructure service vendors who do everything from design to engineering, deploy, maintain, repair. They're an integral part of this ecosystem and really on the front lines deploying the networks and profiting from that 5G boom and the whole fiber overbuild and everything we're talking about here. So that's I think a pretty interesting, kind of new and differentiated angle that I think many investors are starting to focus on.
And then there's some companies that do that actually get the opportunity to kind of get the front of the line view of what's coming down the pipeline, and in some situations are co-investing with those carriers that are asking for the builds. So, for example, if you're building a conduit down a street or down a highway, there's sometimes an opportunity to actually, build next to them, and actually, get into the network servicing business from the construction angle. And quite honestly, some of the companies that are out there today started or originated in that way. So I would agree with James, absolutely.
Wow, so there's this opportunity, I think, for one of the first times probably to be able to directly cooperate, not so much compete, right? I mean, there's that sounds like a unique opportunity.
Yeah, just to add to it there, I just read a book recently called Fiber. I can give out the title. And one of the most interesting parts about it is we as a country are so far behind in our deployment of fiber. Like if you compare us to Japan, South Korea, and others, and we at Freddie Mac, and I'll actually say Freddie Mac this time, we look at internet now as a commodity like water. When electricity came out, we lit a light bulb, but you couldn't power a fridge or any other devices. Eventually, the towns grew up, and now you can power a house. In the older days, you could do it with water. The municipalities have tried with internet. We're so afraid of cyber scares, that we don't want you coming in with your network. Turn off your hotspot or give us your MAC address, because we're going to kill you. We believe in clean air. So we are, as an organization, we are teaching internet should be a utility. When you come work for us or in our buildings as a project team, we're not going to charge you to use it. And this way, we can kind of control, if you're doing something wrong, we could turn it off. Just like the power company, you don't pay your bill, power goes off, you come home to a dark house. And we're seeing it catch on, and it's becoming more and more of a talking point.
Who owns the technology? Is it the tenant or is it the landlord, and why?
So I can start with that. A lot of times you start with we own the building, so we are the landlord, but we're also the tenant. So you have to bring perspective and understanding to your senior levels that, if we rented a place, we'd be interested in these items. Why wouldn't we be interested in a building we own?
Great.
Yeah, I mean, from our perspective, it's, the property owner or the landlord is always going to end up with title to the assets at some point. I mean, I think where probably Colby and I both saw this was early on in the fiber game with companies that are retained to do riser management, right? And the property owner owns the conduit system that goes up and down the elevator shaft. And they just hire a third party to come in and manage it and lease that out to the carriers. And they end up taking the vast majority of the economics as a revenue share or royalty. And while there's different, I think, iterations of the model as you think about small cell or in-building coverage, if it's in the building and if it's attached to their own real estate and it has a duration of life that's going to extend past any given tenant, I think more often than not, that's going to end up, on the balance sheet of the property owner. And I think that there's nuances to that model. Obviously, a lot of service providers who are spending the capital want to own that asset and have the permanence of it. But owning an asset inside the four walls of someone else's property is kind of a tenuous situation. So there's always a debate.
Yeah, I think that as we go forward in terms of this world of connectivity everywhere and 5G, you're going to increasingly get to a shared model, but we're not there yet. And if you think about the carriers like Verizon as an example, they do want to own and control everything right now, and they're arguably the furthest ahead in terms of building out this future that we talk about. In a large part for why they want to do this, they want to differentiate themselves versus their competitors, the AT&Ts and T-Mobiles and Sprints, because if they use shared infrastructure, then it limits their ability to differentiate. Those other guys could follow pretty easily by using the same stuff. And what they're trying to do is give themselves a head start. At some point, we're going to hit an inflection. That inflection is either going to be driven by the demand that actually starts to come, and therefore they're going to want to accelerate that investment, and it'll be quicker to work with others in a shared infrastructure environment. Or it's going to get to a point where the others have effectively caught up and it's no longer a differentiator. And as a result, I do think we're going to ultimately get to a shared infrastructure type environment, but we're not there yet. And I think that's what's making it more difficult to suggest that that's happening now.
And how far away do you think we are from that?
I think we're years away. I think that where I see an inflection in terms of ubiquity of broadband and ultimately 5G use cases, which ultimately will help drive demand for commercial real estate in terms of where do these physical infrastructure components go and are housed. I think that's a mid-2020s decade type opportunity.
And Verizon has gone its own way to a large degree. I mean, with their One Fiber initiative, and instead of relying on third parties in every case to build fiber and provide connectivity to their towers or small cells, they're doing it themselves. And I mean, that probably makes sense in a market like New York, where they can use that fiber for 10 other use cases and across their entire customer base. But in other markets where they're only a mobile carrier, questionable whether those economics make sense long term, or if they'd be better off using a shared network that's different economics because the owner operator of that system has built it for the benefit of many. I think the in-building world should move along the same lines. I mean, it's hard to imagine that one carrier could pay the freight for an in-building DAS system and have it make economic sense as compared to someone who could build it independently and lease that out to all 3 or 4 major carriers. So, but this is new territory by and large for a lot of the mobile carriers and other folks who are using these networks. So it's going to take some time to mature. It could be a decade or more.
Thank you.
So I'm a big believer in competition. I'm not going to go into each different carrier, but when all carriers work, at least the top 4, soon to be 3, all of a sudden, looking for a word, competition with safety. Just don't put an internet connection in there. Give me something more. Show me that you could talk to my smoke detectors. Or as your appliances get smarter, the help by fallen buttons are disappearing. But your microwave might know that you fell and call for you. So as homes get smarter, I think a lot of the companies, manufacturers, appliance manufacturers should really consider a really simple idea. Make those appliances smarter too, for times when you need help.
Do you want to comment on that? Or from a financing perspective, how heavy, from valuation perspective, how heavy are you weighing the fact whether a building is equipped or not?
I basically look at my friends, who came in for interviews. They walk in, they sign in, going after a 7-figure job. They look at their phone, walk right out. So, I think it's really important, that these discussions start taking place, and financing is really not that difficult. Carriers want your business, they'll fight for it. They just don't want to give it free anymore, but they will work with you to help get it into your buildings.
I think from when you're actually going and selling a building, it doesn't really have that big of an impact. I think where it has an impact is in terms of the quality of tenant that you're ultimately bringing in. And one could argue over time there's an indirect benefit to the value of the building because you're able to charge higher rents, and ultimately there's a higher value applied to the building. But I think that some of these things that could be done to enhance a building's value are relatively simple. It's just a matter of taking the time and kind of having a different perception in terms of, as we talked about before, thinking of it more as an amenity and not as a revenue generator. if you have that, you could ultimately bring in a certain quality of tenant, and then with that quality of tenant, you can get certain rents, and with those rents, you could ultimately create a greater value. But I think when we look at the commercial transactions that are commercial real estate transactions that are happening now, there's really no difference that I'm aware of that's being applied in any material way for a company that has an indoor DAS system versus those that don't.
Yeah, and I think the kind of the either direct or indirect beneficiary of that is buildings that have really robust smart building technology around HVAC, security, and related elements have the ability to be more profitable, right? So if you have the ability to automatically turn off the lights when a tenant or resident is not there, cut power consumption. You see this in the hospitality market with hotels, where if you know automatically that a guest has checked out or left, shut off the AC, shut off the lights, close the blinds. I mean, you take that.
How about the mini bar? That's usually first on the list. Get that on lockdown.
I want to add,
but you end up dramatically reducing power consumption, which in some buildings is a pass-through to the tenant. In many properties, though, is a direct cost to the landlord or property owner. And so I think bringing it back to the topic at hand, having a robust in-building infrastructure, fiber with nodes to support Internet of Things and these applications I was talking about, ends up translating into certainly higher cash flow or higher NOI, which has got to be beneficial to valuation.
I just want to ask one question here. One of the things I'm asked a lot, I see a lot, make $1 million apartment, you can add those features. But what happens to affordable living? How do we allow the building to absorb the greater cost, so we could bring our teachers, first responders, and they have those features as part of affordable living. And that's kind of where the challenge is in my world. It's very hard to put that pendulum out there, say, more money, teachers live 50 miles away from their schools. I like to see teachers live in those $1 million apartments, get those fees under affordable living, just give them the bottom floors, but that's our future with our children and just society. We have to learn how to balance that through building cost.
James, what's your thoughts on that?
Oh, thanks, Colby. You sure you don't want to take that?
I would love to hear it.
Actually, I think it's time for Ari to answer that question. Well, I mean, look, you're the, you see it from the inside, Gary. So I think you probably have a sense of which situations are solvable and which are not. But, from my perspective, I mean, you see periodically, affordable housing married with, larger projects, right? So a certain amount of Hudson Yards or Take Your project is carved out for affordable housing. And they're the beneficiary of the same capital investments that are made in technology and communications resources across the entire project, as opposed to having to bear the freight entirely themselves. So that's not necessarily my world or Colby's world, but that would be the view from the cheap seats.
It's really just the role when I go to town halls. There's just that lack of balance that, in the industry I'm in right now is something we are trying to solve. These are, methodologies. We live in a dangerous world. We should provide the tools as responsible leaders in real estate, construction, buildings, and provide those tools. It's cheaper to put it in when the building has it's not finished.
And in terms of innovation, do you see there being more opportunities for companies in the hardware or in the software space?
I think the opportunities are across the board. I think companies can go into senior citizens' homes and build out a model building and set the example. It's like, let us replicate this again. Go to the financiers and say, help us do this again.
I don't think it's, I don't focus on hardware and software specifically, but where I do see an opportunity is actually just in the architecture, in terms of how we're designing things, where I think we could see increased efficiencies. And a lot of it goes back to shared infrastructure, but it also goes back to even within a given service provider, how do they share their own infrastructure? Whether that's using things like software-defined networking or a CRAN type architecture, or even deploying edge locations on assets to which they already owned. So I do think that you're going to see the architecture change to get more efficient, and things like software will evolve with that. But that's kind of where I'm seeing that changes going forward.
I mean, if we're talking about from call it a long-term investment opportunity perspective, Ari, I think I would lean not towards hardware or software, but towards service companies that knit together best-in-class hardware and software to deploy networks, operate, manage them, essentially deliver that as a finished service to the end user. I mean, ultimately, hardware and software technology overall tends to be a binary bet, right? You could have the absolute best technology today. I mean, there were companies that were at the peak of the DSL market. Well, where are they now? Whereas the service companies that bought DSL yesterday and are buying, optical muxing gear, years later, they're still around. So I would tend to, lean towards not taking the technology risk, but focusing on buying whatever is best in class today, delivering that as a service that has real value to the end user.
So it's not an either or a situation.
Yeah, I mean, look, in a buoyant market like this one, I think it's certainly a rising tide that's lifting all boats.
Do you find that obviously the older or the seasoned real estate tenants, especially if you look at New York City, they're kind of moving away just by the sheer nature of how old they are. So some of the newer, younger landlords, when they're constructing these buildings, have you found that technology has been some of the driving forces?
I'm seeing a lot of counties now in town halls talking about it openly and actually really saying to themselves, we're going to give you 5 years to comply. We're going to make this happen. And the question is, when will we vote on this and approve it and start your clock?
I mean, I think certainly usage patterns are changing, right? And you get a certain vintage of tenants, whether it's I think primarily residential, where you'll see the biggest difference is, they bring, they don't need a phone, right? They have their mobile phone, so they're not going to get a landline. There's no reason for that, and they're probably getting their video from over the top, right? Netflix, Hulu, Amazon Prime, whatever it is. So it's a very different need set. So it leans much more heavily towards having, really good Wi-Fi coverage within a residential property, as opposed to having, 3 wires, telephone, cable, and someone else in there. So it's definitely changing based on those usage patterns in the consumer market or residential market. I think the commercial market, though, I don't think is really changing that much. Every business certainly of scale still has a landline phone sitting on the desk, still needs a really robust wired internet connection, and absolutely wants pervasive Wi-Fi coverage throughout. They just today happen to expect 5 bars of LTE coverage all over their office, and if they don't get it, they're probably going to find different space.
But one of the things that is interesting with going back to 5G is this thought of creating these private networks, and there's a real argument that could be made that where the biggest value creation for 5G is going to be is actually on the enterprise, where you remove that last mile, and in many cases perhaps last feet of connectivity, which has historically been wireline, and you replace it with wireless. And there's talks about doing that in traditional enterprises, in industrial type environments or manufacturing type environments, and I do think that is going to happen, and you are going to see replacements, and then the phones or the machinery or whatever that's connected to the network will ultimately, I think, become wireless, and I think it's going to simplify the infrastructure within these environments. But again, that is, going back to what we said earlier, that is what I perceive is still several years out. But I do think we're going to go there. And if you're a landlord who's building these buildings today, you want to make sure that that infrastructure is in place to enable that. And I think to some degree that is happening.
So there's a lot of decision makers in this room here today. One final thought takeaway. Go ahead.
I just have this feeling it's going to be a big discussion point with the election next year.
Great.
I guess final thought would be that anyone who's developing a new property today really has the opportunity to make it future-proof, right? To provide robust wired backbone inside the building, up and down the riser and pervasively across every floor to accommodate the future. Again, as Colby described, if every VoIP handset and every laptop is a wireless connection in the future instead of a wired one today, you still need that. You need wires to connect all the nodes to provide that coverage. So I think money spent today is going to be value for the long term.
I think for landlords and investors in commercial buildings, you're going to see a lot of ancillary services created around this. How do you solve for this? I was talking to the guys at CBRE recently, and they're talking about creating an advisory group that will help businesses to figure all this stuff out, a lot of what we've talked about on this panel. And I think that this will become increasingly important, but I think to some degree this is still a bit premature in terms of what's actually happening today.
Amazing, great. I guess a quick round of applause for these great panelists over here. And thank you very much. It was very, very insightful.